Colleagues, hello everyone and welcome to the weekly market review. Let's start with gold. Take a look at what we have here. Well, it's clear that we are in an impulsive phase. And right now we have an interesting situation because we've hit, or rather not just hit, but actually broken out of this sideways range. And this is where the so-called movement is now beginning. But what's also important to understand is that there's a very significant level. It's around 3,405. This is a very important level because above it, we once again find ourselves in a very strong bullish formation. Why this level? Because there are several truly significant reasons for this. First and foremost, it's that we are clearly and decisively breaking through this very important trend line. Overall, this particular pattern that we are observing is a very strongly bullish one, indicating significant positive momentum. A few weeks ago, I also explicitly mentioned and highlighted that we are currently situated in a market condition where, as you can clearly see here on the chart 7, this specific level itself, these particular values, and the formation of this distinct pattern, it collectively represents an exceptionally and very strongly bullish pattern, suggesting a high probability of upward movement and continued positive performance in the market. And if you pay attention to this vertical level here, we had a downward movement, and this downward movement was broken. So in fact, we are currently in this movement. This is a corrective move, and this is the next impulse. So essentially, here is the impulse. We just don't know where this impulse might lead. So at this stage, we can only speculate. Right now, of course, I would expect that after breaking above this level specifically, 3,400, we might even see a new all-time high. But it's too early to talk about that for now. We need to monitor the situation as it develops. What do we have right now? So what are we interested in? We are interested in several factors. Let me clear everything up. So we know that the boundary where the price has stalled, where it has hit resistance, is very important. This is a very significant level because, as you can see, there have been many instances in the past when the price reacted here. Now let's switch to the 4-hour chart and look at all of this on the 4-hour time frame. First of all, we are currently in this trend, which has just been established. In other words, this trend was broken. And you can see that the important level here is the 0.61 level. Right now, we have basically hit the 0.78 level. So, let's say, above this level, short positions here are just not an option at all. It's not worth looking for them here. But what bothers me is, well, there's one pattern that appeared a while ago, and overall, it does have a place here. This is a strongly bearish pattern. In other words, it's a strong bearish pattern, yes. Its target is a return to the previous low, which is around 3,240. But this pattern at this stage, here, as you can see, even though the 4-hour chart is unwinding, it's doing so rather sluggishly. Although, on the one hand, we do have yes, a target structure, because the 4-hour chart is unwinding and this pattern has appeared, but at the same time, we're still in this movement. So here is the trend. This is how the trend is forming. You can draw it like this, or you can find a way to extend it like that, or someone else might find another way. In any case, all of these ways are correct, because it depends on how you choose to draw this trend. We are also currently operating within the confines of this established channel. If one were to meticulously draw the prevailing trend line in this particular manner, then it is quite plausible that some observers might perceive the formation of a distinct wedge pattern here, which would typically be indicative of a very strong and compelling short signal for potential trading opportunities. But this wedge only becomes active. This structure only activates after this level is broken. And in my opinion, even after this level is broken, but you see how late it would be to enter here, for example, compared to here. So for now I'm a bit uncertain here. The ranges are very wide. What else is bothering me? As I mentioned, the 4-hour chart needs to cool off. The 12-hour chart, well, it still has some momentum, and there's a big risk that it won't cool off after all. The daily chart is still uncertain. I can't say much about it yet. Now, look at the weekly chart just. Look at how big, what a huge divergence, It's really something else. I'm switching back to the 4-hour chart. Now let's look at long setups. As traders, we need to be ready for both shorts and longs. In other words, everything should be. We need to analyze the situation every day. Look, we have an impulse here. If we were to add, there's a clear indicator that precisely shows impulses. You can see right now we are currently within this particular impulse. Here it is, the impulse. According to Fibonacci logic and impulse logic in general, we are expecting a correction at the level of 3,366. Give or take, it could be a bit higher or a bit lower with a very high probability. But that's the minimum that needs to happen for this cycle to play out. Is it possible that we're looking at this kind of scenario? That's absolutely possible. Yes. But in any case, every cycle needs to correct. And this is exactly that case. Could it go higher? Of course it could. It could come back to retest the maximum and then go lower afterwards. You see, that's how it happened, for example, in this format. So the same thing could happen here as well. Therefore, in my opinion right now, I would expect a correction and would look for possible signals to open long positions somewhere, let's say near the lower boundaries. That is, you can already set some basic Fibonacci levels, which would allow us to re-enter in case of a flash crash. Short positions are only considered if the ascending trend line is broken. And secondly, you can open several positions as the price moves forward, but only small positions. Yesterday I opened a short position here, and today I closed it. At this stage, I currently have a long position open on a short time frame, up to the level of 3,391. I took a small long up to the level of 3,391, and I'll see how things develop, maybe somewhere above the 410 level. I'll also be looking for some micro shorts, because I don't know why. I just have a feeling that something like this could happen. Yes, an impulse like this, just as it happened here. Overall, if you look at this pattern head on, is definitely a sign of further bullish growth. The only question is how you want to profit from this movement. That is, understanding that we could still see a bullish move since we have such a strong level here and this level has been broken. In my opinion, we still have a good chance. If you're going to short, the key is to exit quickly. If you short, for example, like I did yesterday, shorted here, exited here, re-entered here, maybe there will be another impulse, but then I'm afraid it could go up again, maybe even higher, and only then will the short happen. Overall, in general, the geopolitics regarding gold basically favor gold. So the global situation as it relates to gold, I just don't see any shorts. Yes, from a technical standpoint, if you look at a higher time frame, there's just absolutely insane overbought conditions here. This is a massive impulse. It will always correct itself sooner or later. So that's gonna happen. But we just don't know if it will correct from here or from here, here, or even higher. All of this correction will happen sooner or later, just like it did here, and then we'll see a new impulse just like it happened here as well. You see what a massive correction that was? So let's look at the situation each day based on the specific circumstances. So what else? Look, overall, on the 1 hour time frame at the time of recording this video, it's Tuesday, 13 o'clock, 13:30 in Italy. Overall, this situation looks a bit bullish. Why bullish? Because as you can see, a structure is forming. So here it is, the structure. Here's the impulse. Sideways correction. For some, this might not sound quite right, but basically we should have had a deeper correction here, but here we have a kind of sideways movement, and here it's more or less still a correction. And right now this part is also happening here. Even though I'm expecting a correction phase, I still have my take profit set at 3,380. I think we could go even lower to around 3,365 to 3,370. And it's here that I would look for a long position. But overall for now, I only see short position here. Only if this level is broken to the upside could there be longs. So for now, be careful with longs. Very, very short term. That's it. That's regarding gold. Silver. With regard to silver, the current situation is actually quite bullish. Indeed, very bullish in fact. Presenting a strong outlook. Silver has gone through this correction. Let's start with the daily chart. Can we call this movement a correction? Well, no. Actually, you see what we have here is an impulse forming. An impulse. So then you see all this movement will be corrected afterwards. Accordingly, at this stage, I would consider long entry points roughly in this range, around 36, 37. Above 37, I would wait. If gold corrects, silver will correct along with it, so it will move further. That's all I have to add about silver. Let's move on to Bitcoin. So what about Bitcoin? Overall, Bitcoin looks quite bullish, but it's currently in this impulse move. As long as Bitcoin remains in this impulse, shorting Bitcoin is rather risky. Be careful, because in my opinion, Bitcoin's target is quite high. At the very least, 134, 132, 130 if you want to be conservative. And right now I don't really see any reversal signals. You can clearly see from the structure that it's just surging. So when it's surging like this, why would you short it? There's an interesting situation with Ethereum. This spot seems interesting to me. Why? Because with Ethereum, from this point, as soon as it started moving, here was the first impulse, right? Then the corrective phase, and now the second impulse. So what's interesting right now? Right now, opening a long at this level, I don't see the point. It seems dangerous to me, and well, there's just no reason to do it. The risk to reward ratio is rather illogical, but I can use Fibonacci for this. Why? Because I know that if we're in a trend, the trend always goes through its corrections. Sooner or later, any trend goes through its corrective phases, and from this point to this point, that is the 0.38 level, there is a very high probability that it will reach here. In other words, sooner or later it always gets there. We just don't know whether this correction will start from here or if it will make another attempt to go up and then start a correction from there. We simply don't know that. Accordingly, we will need to move the Fibonacci levels to those areas that might be of interest. That is, wherever the asset is at that moment. I mean, next, can Ethereum drop lower? Of course it can. In other words, it can easily drop even to this level. That is, to its previous zone, the consolidation zone. Absolutely. So why can't we consider this idea? Of course it can. It's precisely why I would set not just would. I will most definitely set several strategic positions at 3,200 and then around 3,000, specifically targeting those key levels. If suddenly, though it's unlikely, but with some kind of wick, it drops to the 2,700 or 2,800 level, I'll also set positions there. Entering Ethereum now and taking larger positions, I don't see any point in that. So what else? As for the overall situation, we are heavily overbought. You see, the daily is already turning around. When the daily turns around, even as you can see in the past, it can create a situation like this one here, but then it can lead to an unpleasant scenario. But also, if we're actually in a bullish mood, and this is where the risk really lies, that is, we always have to take on risk. You see, we also had a situation here where the trend was supposed to reverse reverse. But then when it gave a buy signal, look at the impulse. Here there was an impulse of almost 16% in just one candle. It's very, very, very likely that the same thing could happen with Ethereum this time. Just like here, look, you see what kind of corrections there were, these 20% moves. That happened literally in about a week. So I would expect this phase, I would consider these positions probably here. And you see everything we talked about back then, that it missed the cycle. Look how it has now fully completed all its cycles. So right now we are in this pattern here. And this pattern, of course, after a breakout upwards, is a strong bullish pattern. Maybe we'll even see Ethereum at $10,000, anything is possible. But at this stage I would be entering here. So the positions I had opened here, I closed them just yesterday on Ethereum because I'm expecting a correction to re-enter. I don't have anything else to add here. So if anyone has questions, I'm available. Peace out. Bye.